We saw a fairly mixed day across the markets yesterday, but November so far hasn't looked that great. We're seeing lots of high quality companies starting to come down. You could argue they deserve this with the high valuations, but we're also noting investor sentiment still sitting right within fear. And today we want to uncover one company that has been absolutely battered. We're talking Duolingo, down 43% in just the last month. Over the last 6 months, this one has been absolutely slaughtered, down 65%. You'd have to have been holding this for around 3 years to really see growth. You'd be up 154%, but ultimately you would be very disappointed given how high this company was sitting not that long ago. We're talking over $500 in 2025. So let's understand, trading at $187, is this an incredible buying opportunity for the growth company? And you can see in 2025 so far it's down 43%. This is off the back of the last 2 years. 2024 it was up 52, 2023 an incredible year for the company, up 220%. And whilst we don't typically say insider selling is a bearish signal because they sell for many reasons, both personal and financial, you can see there has been a lot of selling in the last few weeks, but also something that has been pretty reoccurring for quite some time. We can go all the way back, in fact, to 2024. This is something that just continues to be the case for insiders, but definitely something we did want to bring to your attention today. And we also noticed after their latest earnings, which we will touch upon, analysts have started to cut back on their price targets. We have one here dropping it to $330, another to $300, and this all comes down to the monetization concerns. We even have Goldman Sachs believing Duolingo is now worth $250. And as we saw with where the share price is, that is still a nice gain, and we'll also touch upon valuation shortly. And given the large drop in the share price, you shouldn't be surprised to see Duolingo now trading in an oversold potential panic selling level. This is typically where great opportunities do arise, when there is a lot of fear for stocks, and you should really consider adding companies in this level. Doesn't mean they're must buys, but typically good to avoid companies when they are sitting in the very high overbought or FOMO region. Now their shares were hit and quite hard. This was down to the Q4 bookings, which didn't meet analyst targets. Now they expect somewhere in the region of 329 to 335 million. Analysts did want to see more at 344. Ultimately, even for a company that's growth does look very strong, we can see they're expecting for this full year 38%, which is also above analyst targets of 36%. Guidance is very, very important. We also notice paid subscribers coming in slightly higher. As we always say on this channel, if companies cannot have guidance that is at a bare minimum in line with analyst targets, which we didn't get to see, they will get slaughtered. Duolingo, we noted 20% on that day. One, as we highlighted, battered down 65% in the last 6 months. And during that earnings, they continue to falter, down 44. The other thing to point out is their quarter-on-quarter growth. Yes, this is a growth company, but we are noticing a bit of a slowdown. Now we can see the incremental increase every single quarter. It has actually dropped, in fact, quite significantly if they do hit their Q4 implied point, which means the Q-on-Q, quarter-on-quarter growth will be as little as 1.2%. Not something analysts did want to see for a company that was valued as richly as Duolingo. So maybe this is now the correct re-rating, or in fact the market has gone overboard. And another issue is that the company is prioritizing user growth, as we can see here, at the expense of near-term monetization, something that analysts did not want to hear. They wanted monetization at the focal point. It looks like Duolingo management are actually targeting user growth, which may not bring in the very large numbers that analysts were expecting, at least in the shorter term. But look, numbers are still very, very impressive. Their daily active users, this is on a year-on-year comparison, was up 36% year-on-year. Monthly active users up 20%. And quite importantly, paid subscribers, this is after all where they are generating a ton of cash. 34% increase year on year, and penetration, again very important in terms of those monthly active users, what percentage are actually paying. It was 8.5% last year, now sitting at 9%. Metrics in terms of financials also very strong, revenue up 41% year on year. Remember, they're projecting 38% for the full year. Bookings also looking good, even with the slowdown expected into the next year. And one thing we cover a lot on this company, not just looking at high quality companies that can grow their revenue. Many companies can in fact do that, but can they show efficiencies to their margins, improvements? And that is what we're seeing from Duolingo, 24.7%. Now sitting at 29.5, and there's also a lot more comparisons if you want to take a look. This goes into a little bit more detail. What we want to draw out from here for your attention is free cash flow, very important to us. It is the focal point when we look at our own intrinsic value. Well, 51.2 million last year, now sitting at 77.4, a 51% increase. That is definitely very, very strong. And again, all of these metrics are very, very impressive. Maybe one thing we don't like is that we do get to see a little bit of deficiency in terms of the gross margin. We're talking 40 basis points, but given all of the other strong double-digit growth to the metrics, not something we will punish them too harshly on. And then we get to their guidance. Now look, for the next quarter, they're still expecting very strong growth, as we highlighted, but really what has punished this company, analysts, as we pointed out, did want to see a little bit higher. And for the full year, growth is still looking very strong. We're talking for the full year around the 38% mark. But unfortunately, if Wall Street are expecting a little bit more, that is typically not just for Duolingo, but also other companies where we will see them get severely punished. And we can also hear from the CEO just after the release of their earnings to get a bit more information and understanding about where the company is heading.
You know, where we're at this quarter is we realize that we're in a unique opportunity. Over the next few years, education, or the way people learn, is going to completely change. And that's because of AI. We now have line of sight to be able to teach people in a manner that is way better than anything we've seen before with an app. We have line of sight to be able to teach people in a way that is as good as a one-on-one tutor, and probably also more engaging than a one-on-one tutor. And if we're able to do that, this business is, right now we have hundreds of millions of active users. This business would be a billions of active users type business. I mean, it's just much larger, and that's what we're shooting for. So this is the main thing that I want investors to know, is that we have made a slight shift over the last quarter and in how we invest, and we're investing a lot more in long-term things, because we see that as such a big opportunity ahead of us.
And so what's the preparation and adjustment that investors should make in expectations along those lines? Does that have to do with the AI costs that you alluded to before?
It's not so much the AI costs. I'll tell you what it is. The way we work at Duolingo is we're improving the app all the time. The app is getting better and better every day. And the way we improve it is we run hundreds of A/B tests every quarter. Now, these A/B tests fall into three big buckets. One bucket is monetization. That's basically getting more users to subscribe. Another bucket is increasing user growth. So kind of gamifying the app so that people recommend it more to their friends or stay longer. And then the other bucket is teaching better across all our subjects. Each one of these buckets has a timeline in how fast they can affect financial metrics. So for example, changes in monetization affect financial metrics immediately, because if you just get more people to subscribe, they just pay more money immediately, and that's what happens. Changes in user growth, if we're able to get more users, that takes a little longer, because first, you grow your users, and then they take a little while to subscribe, and then you can see that change in the financial metrics. Changes in how well we teach take the longest, because what happens is that you improve how well you teach. That over time has an impact of increasing user growth, and that over time has an impact of increasing monetization. So, kind of each one of these buckets is more longer term. What we have decided to do starting in, a few weeks ago, or maybe a couple of months ago, is that we have decided to start moving more of our relative resources to the longer term buckets. That means we are putting more resources on teaching better. employee count, for example.
So as we heard from the CEO, bringing up the issues that Wall Street didn't really want to see, they wanted focus ultimately on monetization. They're now looking more at building the user growth. Question is whether or not it will pay off as strongly as they're expecting. But look, let's look at the company. Ultimately, it is still very, very strong. We are noticing a slowdown in growth in terms of their top line year on year. Ultimately, a company can't continue to grow at levels we've seen in 2020 and 2021 for such a long time. Nonetheless, 2024, 41%, expect around 38 into 2025 is still very, very impressive. And if we look at their bottom line, well, actually, it was for quite a number of years they were reporting a loss. Now we're seeing 16 million a couple years ago, 89 million in the last full financial accounts, and on a trailing 12 month, it looks like 2025 is going to be an incredibly strong year. And again, we are noticing very, very impressive growth. And the other thing we like to do with companies is a quick health check, total cash versus total debt. They had 60 million in 2019. They've now grown this to around 786 million. But what we like to do, because one number here in pure isolation is not going to give anything away, is compare it to their total debt numerically and directionally, which yes has grown from 10 million, now sitting at 55, but ultimately their cash balance is far superior than their total debt. It won't even take them one day to pay it all off. Very, very strong balance sheet. That is ultimately what we want to see for a company like Duolingo and pretty much most companies we are considering or investing in. Now we look at the valuation. For quite some time, this company was trading severely above its intrinsic value. We noticed at the end of 2024, it was around $324, but we have here the EV to sales around 255. Now what we're noticing is the complete opposite. The price around $187, the actual intrinsic value at 297, and you can see today this is based on the EV to sales, indicating that the current company is trading 60% below fair value. And on this channel, for each company, we like to run it through our own valuation process. But before we look at how we got to $307, interesting to see that ultimately the EV to sales is pretty much in line with where Wall Street see this over the next year. We're talking $300, which does indicate 61% upside into next year. That in itself is an incredible opportunity. But our intrinsic value will highlight how we got there, is showing $370. Now, as you can see here, we have the free cash flow year on year. Last few years, very, very large. We've gone 15% moving forwards. That is incredibly, incredibly conservative. But as you will note, a low, medium, and high, 10, 15, 20 respectively. And with the 15% and the discount rate, it ultimately gives us the present value of future free cash flow and terminal price, where we add together the cash, subtract total debt, get to the EV, divide by shares outstanding, getting to $370, indicating 99% upside, pretty much a double. Now, more importantly than all of this, on a reverse DCF, this is highlighting today that there's only 2.8% baked in to Duolingo's growth. If ultimately you believe that is way, way too low, then we could be talking about a severely, severely undervalued position. If you believe the opposite and actually anticipate this to grow much slower, maybe into the negatives, then it does look to be severely overpriced. So using the middle rate of 15%, what you will notice here is we've got a 50% margin of safety, which is absolutely insane. And typically we kick things off with 10% execute buy if it meets our 3 golden criteria: wide moat, strong financial metrics, good forward-looking data. So a 50% margin of safety based on 15% growth. Even if you want to be more conservative at 10%, $278, 49% upside, we're talking 33% in terms of a margin of safety. The opportunity is looking very strong today. And the other thing we did want to cover is that the company has been diluting investors with their shares outstanding increasing up until 2023, although we do notice a small drop to the end of 2024. If we take a look at the shareholder yield, you can see it hasn't been that great at all for shareholders over time. The one thing we'd say is if they can increase the share price over the longer term much faster than the S&P and diluting, it probably isn't a worry. The issues arise when we're noticing, in fact, the shares outstanding climbing over time and the share price in fact decreasing, something just to bear in mind. And if you wanted to have a quick look at the breakdown of the company, well, 89% of the revenue that they generate comes from subscriptions, which is why Wall Street making it very important. They're making it known to management that this is what they want to see grow, monetization, not in fact user growth, because ultimately not every single user is going to pay for the app itself. And then we notice here advertising a little bit there, around 42 million, as well as the Duolingo English test, which is very small in comparison. The other thing we will point out, although isn't really anything interesting, at least for Duolingo today, is that when members of Congress buy or sell, it is something we like to pay attention to. We noticed there was a buy and a sell a couple of months ago, nothing really to point out, but this is something we always do like to keep our eye on. And one thing we will draw to your attention is the CEO when he was talking about their moat being penetrated by the likes of, in fact, the Apple AirPods. We can see here the final paragraph. He talks about this has been happening for the last 10 years. We have not seen the desire to learn a language go down at all. In fact, it has come up, and I think the biggest reason for that is because if you look at our users, they fall into two big categories. One big bucket is people who are learning a language as a hobby, and he ultimately believes that the moat penetration isn't going to be something that should be a worry for shareholders, and maybe you could argue he does have a point. Their numbers still continue to grow at a very impressive, strong double-digit rate. And the other thing we wanted to note here is in a LinkedIn post not that long ago, he talks about chess, something that Duolingo have now brought in to their ecosystem. We can see here, I was thinking about chess as a game. She was thinking about it as a way to teach kids how to think. So I greenlit the project. We started building with a team of 2 people, designer, product manager, neither engineers nor chess players. They built the first prototype, and 1 year later, 20 people on the team. That is how big this thing has got. Millions of people are learning chess on Duolingo. It is our fastest growing course ever. So there is quite a lot that they can expand. It isn't just a learning software application. So just bear in mind there could be lots of other ways they could continue this very impressive growth. And we can just end by looking at this company. Yes, the share price has in fact been hammered, but their sales continue to climb. 2021, $162 million, and now we're seeing around 964. It continues to climb every single year. Bottom line also moving in a similar direction, although we do notice it was negative for quite some time. Now the growth is looking good. 89 million 2025, trailing 12-month basis, as we pointed out, 386 million. And finally, what we're seeing, an investor's dream, high growth company with the valuation coming all the way down. On a trailing 12-month now, Duolingo is sitting at 22.1. So the question is, should we add Duolingo? Is it a massive buying opportunity? Is it in fact a hold, or maybe one in your view to completely avoid? Do let us know your thoughts, and if you enjoyed the use of this platform today, it is Forecaster. You can click below, sign up, has a ton of great information, and as always, have a great day. We'll see you all on the next one.